Irani is the Chairman Managing Director, joining in on the show. Good to have you on board, Boman. Thanks so much for joining in. Now, your pre-sales momentum in the mid and the mass, as well as in the affordable segment, has been robust, contrary to the premium segment. Now, last year, your premium segment did quite well, but you witnessed a dip on a year-to-date basis. Just want to understand what has caused this trend divergence.
Good morning, and thank you very much. Look, we have the wide bouquet of projects all across, from affordable, which is less than 1 crore rupee apartments, going all the way up to premium and super premium, which range from 7 crores to 15 crores and beyond that as well. Last year, we had a one-off sales, which was in the premium segment, and that's why in that quarter you saw a huge blip. Given the fact that pre-sales this year or this quarter have been close to around 1,131 crores for the year to date, and collections for the year to date are roughly around 1,163 crores, which is roughly around 19 and 27% higher than year on year last year, if I remove the one-off sales that had taken place last year.
So what is the right way of looking at your numbers? Since you're a new company, markets will look forward for some kind of a definition as to how should one look at your numbers, because nobody looks at real estate numbers on a sequential basis. But in general, what should we expect?
So basically, pre-sales and collections are a good number to look at. New launches, pipelines, and operational cash flows are a great number to look at. I can mention to you that the surplus for the quarter in terms of operational cash flows to date have been about 110 crores and 280 crores for the year to date, respectively. These might be great indicators to look at. Another indicator to look at would be the healthy pipeline, the robust pipeline of new projects that we have kind of launched. In the 9 months of the last year, we have done 0.5 million square feet with a gross development value of roughly around 545 crores. This year, in this quarter, we've tied up close to around 0.6 million square feet, which will get launched, and the gross development value of those would be in excess of 1,000 crores. Financial year 23-24, 2.5 million square feet with a gross development value of close to around 6,400 crores is what we see. And total, till March 24, we see about 3.1 million square feet getting launched with a gross development value of about 7,400 crores.
So what you're telling
these would be great indicators.
Yeah, so what you're telling me is that FY24 is going to be the best year in your history. If I add up the kind of projects what you're launching, it may perhaps be one of the best year for you?
So the way I look at it is we constantly replenish, or we have a robust pipeline of new project launches. These new project launches are in line with our investment philosophy. As I had mentioned earlier, our investment philosophy is not to invest more than 10% of the gross realizations of the project before we are ready to go to market. This keeps us asset light. It keeps us, very low on investments in new projects. And the general returns on these projects in terms of EBITDA would be in the region of about 25 to 27, 28%. And your PATs would be in the region of about 17 to 19%. So yes, we, given the regulatory framework and the fact that we are constantly able to keep churning out newer proposals or bringing new proposals to fore, we should be having a great year going ahead.
There are two things which we need to discuss purely based on budget. A, what's happened to the luxury housing, and B, what's happening to the affordable housing. Which one should we start with?
You choose. I can tell you about both if you want. I can start off right away. What we saw in the budget was that homes or rather your capital gains was capped at 10 crore rupees if you went and purchased a new home. Again, over here, Rustomji is well placed. Keystone Realtors is well placed because we've got projects in what we call the aspiration, which is in the 3 to 7 crore rupee range, and premium, which is 7 to 15 crore rupee range. And we have a good pipeline of these projects as well. So those capital gains, those who are trying to gain advantage of the capital gains would fit perfectly well in these segments. Immediately on the finance minister making the announcement of the budget, I quickly checked with our teams as to what were the sales that we had thanks to the capital gains advantage last year. And I can tell you of the 20 plus apartments that we've sold in the super high value, and we're launching plenty more this year. We did not see more than one that was for capital gains purposes. So look at it this way, that there is a natural demand for good homes. People have the ability to go out there and use their capital to get a good home. And those are the kind of buyers, discerning buyers that come to us for their homes. On the affordable side, I think the government has done a fabulous amount of push. I wish they would define affordable housing only on the basis of area and not on the basis of a cost that is 45 lakhs. The whole point is that by kind of making it a little difficult to fit into 45 lakhs, we are keeping Mumbai MMR markets out. Having said that, we've got two projects in this price range. One is in the Virar and the other one that is soon coming in Dombivli. Both of them will be able to serve the affordable housing market, and that's a steady state market. You just have to create a great product and give continuous pipeline for supply, and it turns out quite well.
Yeah, and you also had the PM Awas Yojana outlay increasing it by over 66% to about 79,000 crore rupees this time around. So just wondering, I know you touched upon affordable housing, but would you be looking at catering more towards this space down the line?
So as I mentioned, PMAY is a little, it's still got to come into its maturity. I'm not the right developer for PMAY developments. We do affordable housing in the 30 to 50 lakh rupee brackets. But no, we don't do PMAY at all. No.
And let you go on that note. Thanks so much for taking time out and joining in and giving us a view as to how business is shaping up, your targets, as well as outlook down the line.